Thanks, Shahid, and thanks everyone for joining us today on this webinar. I'm excited to share some insights that Rachelle and I have gained over our years of experience in the industry, um, and hopefully you find it helpful. So today we're going to be talking about specifically mindset and how F&I, if you're looking at trying to improve your F&I performance in your dealerships, if this is something that you're just starting to take seriously or been dissatisfied with the output and you're trying to elevate it, it all starts with the way that you approach F&I from a mindset. And so we want to dispel some misplaced assumptions. We want to encourage you to think about it in a little bit different way. Before we jump into the meat of it, I'm going to do a quick introduction of myself and turn it over to Rachelle to introduce her. My name's Matt. I am the sales manager here at IDS in the RV division. Prior to coming on with IDS, I was on the retail side of this business in dealerships for over 20 years. And I've done virtually every job in the dealership, from washing trailers as a young teenager during the summers to most recently, I was the chief operating officer of a 9-location organization that spanned 3 states. And Rachelle is joining me today, and I'll let her go ahead and introduce herself to you.
Hello. Thanks, Matt. Thanks for having me too. I appreciate the time and I appreciate doing this. And just full disclosure, totally nervous, never done this. Matt knows that. We have working history. I've been in business over 20 years. I've done finance for most of my career. I've been in the private sector now for about 5 years, being an account manager for Elevate Dealer Services. I'm the national sales director. I got hired in RV Finance because I went to a barbecue at a big dealership once because a friend of mine worked there because of my big personality. So that's how I started my career. So that's how it is. But I love finance and I'm a huge nerd about it, as Matt knows.
We're grateful to have you and excited to share some of your knowledge and experience with the rest of the group here. So we're going to jump into it. Before we get into kind of the meat of the meat and potatoes of this session, where we're going to talk about some specifics and things that you can apply, take away, maybe apply tomorrow. I want to start by talking about some of the mindset traps that I saw and that I know, Rachelle, you have experienced over your career, and just get those out of the way first so we can start to think about F&I differently. And the first one that I want to throw out there is one that I heard a lot as we grew our business. Most of our business growth was done by acquisition. So we brought a lot of dealerships, a lot of personalities into our organization. And one of the things that I heard a lot was, Mike, our customers are just different. Rachelle, I don't know if you want to expand on that, but that's something I know you heard from my finance managers as we grew, and I know you've expressed that you've heard this a lot throughout the industry, is that somehow our customers are just different. What do dealers mean by that, and what's the reality?
So, like I from Idaho to Indiana, I've heard all the way across the United States, our customers are just different. They're not going to buy from your national lenders. They're not going to want your product. They just don't. They don't believe in what we're going to offer. So I don't know why we're going to do it. At the end of the day, a customer's a customer, and it's just it's our mindset. It's how we present it. It's how we handle the situation. Because really, at the end of the day, it usually is payment, price. That's what it boils down to. There's no difference. Their money is all green. That's how I look at it.
One of the things I heard a lot throughout our growth was our customers just like to use their banks. Like, we have one local lender that our customers really like to use. I heard that a lot. What's your response to that?
Well, obviously, always is. That's fantastic. I love to train your salespeople to ask, okay, well, who is that? Because we use multiple lenders. We have dealer preferred rates. We have dealer, so dig into it a little bit. And then, it's okay if they want to, but a customer is not educated. We need to be the ones who are educated to show them we might have a better problem solver for them. We might be able to do it better. But because if they walk in, they think they're going to get 4.99, but they don't realize it's only 60 months. They don't realize they can go 180 months, 240 months. They don't know. We have to educate them. That's our job.
Sure. One of the things that I found is that ultimately most of our buyers are payment buyers. They're shopping a budget that they have, and their budget is monthly. And so they may have preconceived notions about what they think they want, but often reality and what their preconceptions are just different. And it's our job to educate. One of the other things that has been thrown around, it's something that I think is a little bit older way of looking at things, but I still hear it and I still see dealers approach it this way, is that F&I stands for found income or icing on the cake, gravy on the potatoes. It's not a major revenue driver. It is a bonus. Basically, it's something we get because we sell RVs. Rachelle, what's your take on that opinion, and what would you tell dealers how they should change that mindset?
So my biggest point on this whole, like we discussed prior, is it's not down income. It actually, I've seen it in personal, what in my personal life, going into dealerships and helping them. I kind of was a fixer. That's what I like to do, is go out the smaller dealerships, find a way to stay open and do what they're doing. It's once again changing your mindset. I mean, I went into a dealership that made 300,000 a year in finance and made 1.2 million in 7 months. That's a huge difference. That kept the doors open, but it was all just changing mindset. You can't do this. That's what I heard when you walked in. There's no way you're going to be able to do this because our customers are different. Our salespeople are different. We're not going to be able to do this. It's not how you treat it. And it should be treated as a very serious job. And that's the other thing I always want to say is, I mean, it's a privilege, I feel, to be able to make the kind of money we do and do what we do. We should make this a master of our craft, what we should do, and be the best of what we can do.
Yeah, this takes us into when we talk about being the best, another misconception or mindset trap that I think dealers fall into. And even if it's not voiced, I see actions amongst dealers that make me believe that a lot of dealers view it this way, is that F&I is a one-man department or one-woman department. It's one person in an office. And if we're not getting the production out of F&I that we think we should, we must have the wrong person in the seat. And I think in my experience, that's not always the case. We might be setting that position up to fail before we even get started. Did you want to elaborate on that at all?
Yeah, I feel that we should be a team, because a lot of times you walk in a dealership and number one, finance and service are against each other. I love my service department. They're, it's how you treat each other. But sales, you should be sitting in the sales office. You should be having a relationship with your sales manager. You should have a relationship with your sales guys. They need to know that you're part of their team. If you're just sitting in your office and you're waiting, and every time they walk in and then they hand you a cash deal, well, you're mad. Well, it's kind of on you because you weren't there when it facilitated. Why weren't you helping? I mean, we can't always be there, but we can be there a lot more than we are. I do know that. We're not always with customers.
Yeah, I agree with that. And it really is a team sport. And that's one of the biggest things that dealers need to wrap their head around if they want to take this really seriously, is that this starts from the time the customer walks in the door. And we'll get into that deeper as we kind of get into the meat of this session and what we mean by that. But it is the place to start there is realizing that this is a team effort, and that it's more, it rises and falls on more than one person's shoulders. Last thing that I want to throw out there, the mindset trap, is that somehow if we want to increase back end, it means that we've got to be willing to sacrifice front end. We have to give up a bird in the hand for two in the bush, or the opportunity to sell back end requires us to sacrifice something on front end. I think I disagree with that. I think you do too. We'll talk about some of those things. But I think as the last point here before we move into the heart of this session, is that we need to realize that we don't have to sacrifice our front end profits to have great production on the back end. This isn't trading profit from one profit center to put it in another. We can get both, and that our banks allow for this.
Absolutely.
So with that, we're going to jump into kind of the agenda for the rest of today. And what are the actual secrets, and not so much secrets. A lot of these things I think you're going to find are just logic, but it's so many of them are overlooked. And so we're going to go through over the next few minutes. We're going to talk about F&I as a team sport. We're going to talk about how good finance starts before the finance office or before the box. We're going to talk about creating a culture of accountability. In that section, we'll talk about benchmarking and pay plans and things like that. And then, we're going to go over the fact that our customers need to trust us. They need to believe that we're experts in this, and that we don't want to make any assumptions about what the customer can buy, what they're going to be interested in, what they'll find value in, and we'll elaborate on that as we go through. That's essentially the main points that we're going to cover today in 4 brief sections. And then when we're done going through the content, we will open this up to questions. So if you guys have questions, throw them in the chat, and we'll get to them at the end. So this is the first thing before we move on to F&I as a team sport. Rachelle, I wanted you to talk a little bit about what is the difference between an average F&I mindset versus that superstar F&I mindset that you like to refer to.
So I'm big on this too. I like to be the best at whatever I do. So I want to know everything I can know about my job. So I want to know my lender programs. I want to know what my LTVs are. I want to know all of it. I need to be the master of that. And once again, it starts with me working with the desk, and it starts with me starting at the process.
I like what you said, and we put a bullet on here about it when you said superstar F&I managers, they avoid working reactively and they work proactively.
Yeah.
And it's on here as superstar F&I designs and influences decisions. Elaborate a little bit on that. What do you mean by working proactively or F&I designing for the desired outcome?
Well, and it comes back to salespeople walk in, they hand you a cash deal. Your job is now to convert. We all know that part. But also, they come in with a deal that's kind of hairy, and we don't know what we're going to do. Work on it. A salesperson deserves you to be able to not say, "Oh, this is never getting done." I don't like to say that. He did his job. She did their job. They worked hours with this person, and now they're going to walk in my office and like, "No, sorry, not going to happen." We need to quit assuming, as we talked about earlier, what the lender's going to tell us. We need to submit it to the lenders. We need to structure it properly where we know our programs. And that's where what makes us a superstar is that you know where your niches are and what you're going to do with that and how to structure it for each one of them.
Yeah, that's great. And we'll touch on these things as we go through each of these sections. What is the difference between, what does a superstar do versus what is maybe the default reaction? So the first real area that I want to dive deep into is F&I as a team sport. And we'll start with talk about success starts at the first engagement. What do we mean by that? What should our sales team be doing right from the get-go to set F&I up for success?
What should they be doing?
Yeah, well, what should our sales team be doing from the first engagement?
Yeah, we should be helping train them, because what's the number one question a salesman's going to get asked right when they start getting the nitty-gritty? What's my rate going to be? Now, if we teach them how to handle that question so they're not afraid of it, instead of going, oh, 599 to 9.99. The only thing that customer heard when you said those words is 599. They're not going to take the 9.99 ever. They're going to be like, well, sales guy told me I could get 599. Now, if we teach them how to handle that properly, we get the best terms possible. We use multiple lenders. We have many different programs. I'm not an expert in finance, but I do have someone who is going to help us once we decide what you guys want to buy, what fits your needs. And that's the biggest thing, is just making them not scared of it. Or we're going to use our credit union. Okay, what credit union? So it's just teaching them that, okay, it's not offensive. They're there to spend money. So they know they're taking money from somewhere. So why can't we ask? I say, that's great. We use them. What credit union? How many times, Matt, did you see me walk out because the sales guy's like, I don't know. They were terrified. And I'd walk out and be like, hey, that's great. What credit union are you guys using? Oh, great. We use them also. Could I save you some money? If I could save you some money, would you want me to do that for you? Because that opened that door.
I like what you said about training F&I being involved in the training process with salespeople, because I think these are questions that can throw salespeople, especially unseasoned salespeople or poorly trained salespeople, for a loop. I like that you threw out the rate question. That gets brought up almost every time as soon as the questions about can you facilitate financing start to become prevalent in the conversation. It's one of the very first things that gets asked is, what is my rate going to be? And you're right. When that salesperson throws out a range, the customer only heard the lowest possibility in that range. So we want to avoid that. One of the other things that I've seen salesmen or salespeople do effectively, I've seen them do it ineffectively, is one of those early questions that I got a lot was, what is the warranty on this vehicle? Most customers want to know that. Most of them are going to think to ask it sometime during the process or multiple times if you're demoing more than one unit. And it's actually a question that in the sales process, it can kind of hurt you or slow you down, because the answer usually isn't that great, right? If I'm selling almost anything, the warranty period is probably a year. Maybe 2 years with some rare exceptions, but it's not a great warranty. And I've seen salesmen handle this question really, really well by simply turning it around in kind of a benign comment that sets the expectation, something along the lines of, hey, the manufacturer is going to cover this vehicle from defect in workmanship and components for the period of 1 year. But the good news is we have a variety of different options for you to protect this long past that into the future. And we'll talk about those in more detail once we find the vehicle of your dreams. We have a specialist or an expert in-house who can talk to you about that. And it's a way to get through that question really easily, but it also plants a seed in the customer's mind that they're going to be talked to about this. It's not the first time that they're hearing about this when they sit down to sign their paperwork. So that's another way I've seen that can start early on from the first engagement. We've got on here, the desk is your greatest asset or your biggest liability. And this is a big one for me. This was a big mind shift that we had to make when we decided to tackle F&I seriously in our organization. Is around the desking process. So Rachelle, if you could elaborate on that, what do we mean by they're either going to be your best asset or your biggest liability? What can the desk do to be an asset versus a liability?
Well, once again, we're going to start with training and accountability on the training, because that's the biggest thing. It's training. And whether you use a Foursquare, where you use whatever you use, you're going to get to where a customer has a payment. Now, I've seen it happen multiple ways, and we talked about this too, is I've seen a customer come in and their expectation is $287. Well, we can get that at $120, but all of a sudden the desk sends out a $180 at lower payment than what the customer even expected. Why did we do that? Why did we offer that up right there? Why did we give it away? I mean, we met their expectation at $120. Let's keep that back. Let's show them the best way to buy their protection items later on, and how to get the best, deal. So that's part of it. And also, we talked about, my favorite thing is to get to that fourth box, what I want to do it, like I said, and it'll say lowest rate, longest term, lowest payment. I've never had a customer one that asked me for the highest rate, the highest payment, the shortest term. I hate those answers. Just ask the question. You're buying something. Ask the question. I mean, when I go and buy a car, I know in my head what I want to spend, and what my cushion is. So we can't be afraid. We can't be afraid to ask for down payment. We can't be afraid of any of it. So we don't pencil out at zero down. We don't start at zero down. It hurts. I said, it enables our ability to maximize what we can do as a team. So that's the biggest thing.
Yeah, so to summarize that, we don't want to come in and be desking our deals right out of the gate at 240 months with nothing down. We're at that point, we're setting the finance department up to fail right from the first pencil. We want to make sure that we're penciling these with down payments that are appropriate, ideally 20 to 30%. We want to be penciling these deals at 120 months out of the gate, so that we give F&I some room here to work and look and come in as a hero versus coming in as the bearer of bad news, so to speak.
Well,
Starting off the relationship on the wrong foot, letting a customer know that they couldn't get them the payment that they wanted. Instead, we're coming in with better than the payment they wanted, and perhaps even getting them some added protections at no additional monthly cost.
well, and just to elaborate on that a little bit too, because I was here. Well, I'm not going to do your job for you. You know, if you're so that's your relationship first not good with your desk because they don't want to do your job for you. Well, this is all of our job. So it's like I love if you guys come in and hand me a 240, you're maxed out. That's where you had to go to pencil it down to get the deal. Get the deal. It's to move the metal. That's what it always is. We're gonna move it over the curve. I don't care. I love a challenge. Hand it to me. Give it to me, and then I'm gonna work it as best as I can. And I'm pretty good with customers at that point too. Hey, they promised you this. This is my either or scenario. I could do this, but you're gonna have to give me that,
Yeah.
so always get the deal. So don't ever think when I talk about this that I want you to do finances job. But if you start there and you all work as a team, it works out a lot better at the end of the day.
Yeah, I like that because that takes us into that last bullet there. Effort builds trust. Part of this is a two-way road. It's not just about getting the sales department on board with these process changes or focusing on F&I as a area that we're trying to improve as a team. It's also about your F&I managers doing their part to build that trust with their salespeople, which means working every deal to the bone, trying to turn declines into approvals. There's no way as an F&I manager to get sales on your side faster than to get their deals approved for them, so that they can collect those commissions. So I like the point here. They deserve more than a box checked and a decline. They deserve you to work the deal, know your programs, identify your lenders that can help in different scenarios, and know those well enough that you know when to leverage those lenders appropriately.
Yep.
Service should hurt, not help. I do want to touch on this. This is something that I think is kind of a longer term view on this, but I think it's important. Often what I found in F&I was that when somebody gave right out of the gate, I sat down, I got ready to present a menu, and the very first thing out of their mouth was, "Don't bother, I'm not buying anything." That there was typically a bad experience. And often that experience originated the first time they tried to leverage one of these products that they bought. They tried to get something covered under their extended service contract that they couldn't. There was some sort of pain associated in the past with doing this. And this is where I think service can really help, because a lot of times these declines aren't because the product's wrong or doesn't do what it says it should do. It's that service doesn't know the process. They don't know what they're supposed to be doing. They're not well trained in how to process claims, and how to ensure that they're getting claims approved, how to word things correctly. And I'm not talking about lying, but these extended warranty companies are looking to decline claims that they don't feel that they're liable to cover. And sometimes it just comes down to the way it's worded. They get the impression that it's not a covered item because of the way it's been worded, when in reality it should be covered. But we just need to word this better. So I think from a team perspective, training service on the proper way to process claims is a big deal, because that's going to create good experiences, which translate into easier placement of these products in the future, when these customers inevitably trade in their vehicle and trade up and move on to fancier, more expensive vehicles.
Yeah.
So in the interest of time, we could spend more time here, but I think I'm going to move on just in the interest of time and covering everything. So good F&I starts before the box. I want to jump right into, before we'll get into bank programs and stuff, but I want to talk about cash conversions because this is something that we put a lot of emphasis on. And I want to get something off the table right away, and then I'll let Rachelle let you elaborate on how we can effectively convert cash. But cash unit discounts or reserve sharing, things like that can be pretty controversial. They also have regulations depending on municipalities and states and counties on what you can and can't offer in the way of discounting a vehicle's price to get the F&I. So I want to place that on the side and just say, let's not talk about offering discounts on the unit to get finance conversions. Let's talk about the other ways that we can convert them. So Rachelle, can you elaborate on cash conversions? And maybe starting with what's the reality behind these cash customers? Are they all paying cash? How do we find out?
They're not. The reality is they're taking it from somewhere. Their retirement, their equity in their home, they're getting it from somewhere. So that's the questions we need to be asking. So is this cash? Well, yes, of course. Oh, so you're going to write a check from your personal, well, no, we're going to need 6 days to get it from my retirement account, and then we're going to need this. So just being educated on that part of the process, because money's coming from somewhere. And why are you going to spend all of your money on a depreciating asset if I can save you some money in the long run also? So it's having the uncomfortable conversations that no one wants to have, because a lot of people, when I hear them, okay, great, your cash. And once again, if it gets handed to me at the desk, I have no problem with it. But now my job is to figure out, is it cash? Is it not? Sales guys should always just get the deal. I'm going to preach that always. The deals, they're doing their job. I mean, they should ask the questions, but if they can't get to the answer, we need to get to the answer and not be afraid. And we need to be proactive when we do it. Because if you wait and you send a customer, you let them walk out, no purchase order should go out from the sales desk. It should always come from finance, because you had an opportunity to talk to that customer, because otherwise that customer can walk right in their bank and draw that out. And it's so much harder to get their wallet open later to get a service contract or anything else you want. So being proactive in this process too.
I love that. I love this is something that we implemented across our organization that was very effective, is the mandatory F&I turn at the time of signing, at the time of commitment, I should say. We facilitated this by, in a lot of our stores, just by saying that F&I, the finance office, was who could take the credit card deposits, which forced the issue. But one way or the other, figure out how you can ensure that finance gets to take a turn with these customers every time. They shouldn't be meeting these customers for the first time when the customer shows up to take delivery of the unit.
With their cashier's check in hand and they're buttoned up right now. That's it. Because if they're cash and they're going to their bank to present a menu right then, I'm going to send them to their bank with whatever I can offer them and whatever they find the value in at that moment. I'm going to take advantage of what I can. Cash, we all know cash still suck in finance. They're the hardest ones to sell anything on. But if you build the value and you do your job, you can close a lot of warranties and a lot of paint, fabric, tire and wheel on those too.
Yeah, agreed. And I like the point, if you're going to take one thing away from that about cash conversions, there's a lot of tactics that you can use to convert cash. We mentioned discounting the unit. Some dealers do that, some don't. Some areas allow you to do that, some are more restrictive. But I like the fact that I would say the majority of your cash conversions can be converted because they're not actually cash buyers. They're actually getting a loan or borrowing, like you said, from their 401k. They're not actually paying cash. And if they're not actually paying cash, you're not converting them from cash. You're converting them to letting you do the work, and versus them having to go out and do the legwork to facilitate getting the money.
And a lot of times, all of a sudden, they come out with a check, and it's a bank that you use, and we did a job, and you're like, man, I probably could have kept control of this deal by keeping it in the house letting them go to their lender, but or use their lender with you, because you now have control of that. Don't ever tell them no. If they want to go with their own lender and they're going to take percent higher, I've seen it done. It's silly, but that's their choice. But offer to facilitate the paperwork and do it for them, make it easy, because you still have control of that deal 100% of the time.
So talking about again where F&I starts before they actually show up and are in the box getting pitched a menu of products. One of the areas is working every single angle of the deal, and that involves knowing your bank programs inside and out. Rachelle, you had kind of an old school way of having our F&I managers do it that I really liked. They had a physical bank book that they would just update pages in as the bank programs would change. But give us some examples of why that's important. Why knowing your bank program is important.
It is funny because I do have the old school way, and it's probably because I'm old, but I find it works, because when you walk in as a sales manager, like, hey, I've got this deal and we're kind of pigeonholed. What can we do? You can take this page and look at it here at Huntington National Bank, M&T, like M&T, you can use just credit score. If you know those programs, if you've been in the business, VIB, that's kind of the same thing as the spot program from M&T. So if you know that, like, I have a DTI issue, and you can figure it out, you can help close a deal right there that might not look like a deal to a sales manager or to a salesman, because maybe they have zero down. Well, you can do up to zero down up to a certain dollar amount with one of these lenders. So just knowing that and working with them, I think I don't like it on the computer because I don't feel like I pay as much attention. Does that make sense? That's why I like the paper. I can compare them like to each other when I look back and forth, like, oh, I can do this, I can do that. It just, once again, talking to your lenders, talking to your reps, asking them the questions, asking them what their buy box is, asking them what they prefer, where am I going to have the most success with you as my lender? That just helping yourself that way.
Yeah. And on that note, it also gives you the opportunity to talk to the customer and build some credibility, I found, because a lot of customers come in with the idea that they're going to use the bank that they use for everything, right? Their mortgage is with their credit union, and their car loan is with their credit union, and their savings and checking account are with the same credit union. They come in and they tell the salesman, hey, I want to go through Mr. Rogers Credit Union because it's what I have everything with. And I found that this is a great opportunity for the F&I manager to step in and say, hey, no problem. We work with all the major lenders and local regional credit unions, and we can absolutely facilitate that for you. Let me ask you this, though. If I can find you a better way to buy this, if I can get you better terms through a different lender, are you open to that? In my experience, the answer is almost always yes. Very few people, unless their brother-in-law is the president of the bank, very few people are actually married to a specific lending institution. They're more in love with the idea of the ease behind it. And there's nothing easier than letting me handle it for you, right? As the F&I manager, the easiest thing you can possibly do is don't worry about it. I'll take care of everything.
And having policies in place. I have unfortunately walked into places and seen finance managers sending out invoices to lenders that they don't have a relationship with. You can't do that. You're not supposed to do that. You don't know who's sitting on the other side of that email that just got that. You don't know who had that. So you have to be very careful, and you have to have processes. And you just say it's our dealership's policy. We don't send out invoices, period. MSRPs, of course we do, but not, you don't send an invoice out.
And on the subject of F&I starting before the box, I think everything we just talked about here illustrates the need for your F&I managers to be connected with the desk at the hip. Our F&I managers, and Rachelle, I know this is common practice amongst your dealers, your body of dealers that you work with, is that F&I managers that are not in the office signing a customer should be in the sales tower, or should be sharing a sales office with the desking manager. They should be working side by side with them hour by hour, unless they're actually with a customer. And all of these things get easier if you're proactively setting the pencil and setting the deal structure up from the beginning, so that you can be doing what we have here in this very last bullet on the page, which is you're working deals for approval, not repair. These deals are structured from the beginning. You're not coming in as the F&I manager having to try and fix what was poorly penciled or penciled in a way that just can't get approved, and starting yourself on the wrong foot with that customer.
Yeah. If you're sitting in there, you know what's going on. If you're sitting there, you know what's going on, and you can take a finance turn at that time if you need to help close the deal even. You can walk out and tell a customer, I will submit it this way, but this is the reality. Once again, I become in as the expert, and now they trust me that I'm there to work for them and with them on this deal. But I'm going to give them a reality too, because I don't want to call them and blow them out of the water by telling them, oh, sorry, now you have to have 10% down. I'm going to set it up from the beginning. Like, I will submit it with 0 down, or I will submit it this way, but I don't know that I can get this approved for you that way. So just being willing to take that turn. You build a better relationship. You have a better opportunity when they come in to see you in finance after you've already been out there working for them.
The last thing I want to touch on before I move to the next, we are coming short on time, but I'll hurry through this. This is one that I think can come off as a little cheesy, but I've seen it work. It worked for me. It worked for many of my F&I managers, is having stories and or props or examples ready to help conceptualize why these products can be valuable to our customer. One example there is a lot of our F&I managers would keep current work orders. They get maybe a new work order every month from their service manager of a great example of a work order that had 1, 2, 3 covered items on it, that illustrates how expensive these things can get. We're replacing a side-by-side refrigerator in a motorhome where the window had to be taken out to get the refrigerator out because it wouldn't fit through the door. And all of a sudden, this customer has a $7,000 or $8,000 repair order just to repair a fridge. To be able to show those examples of where this coverage would save your butt, I think is important. It can sound a little cheesy. It works. So have stories and real life examples that you can share with your customers, and have those ready to go, is another great example of how this starts before the customer's actually there. You need to be prepared. You need to know what you're going to touch on, what's going to be important to this customer before they show up. So I want to jump in before we run out of time. I want to talk about creating a culture of accountability, and start with the top-down alignment. For anybody on this call who's an owner, or general manager, executive level management, who's wants to take this seriously or wants to improve upon what they've already built, accountability starts at the top, and that's a self accountability. As an owner, the only person I'm accountable to is myself, as far as this goes. So it has to start from the top. Ownership, management has to believe and want to do this, because that's going to trickle down. But we also need to show each key stakeholder what is in it for them. There's a lot of kind of more intangible examples of what's in it for them. The better job we do, the more likely we're going to have happy customers, we're going to have return customers, we're going to get deals bought, et cetera, et cetera. But one of the obvious things we can do is pay plans. That is a really easy way to show everybody what's in it for them and create alignment very quickly. Whether or not the philosophical alignment exists, at least they're aligned because it's how they get paid. So I don't know, Rachelle, do you want to elaborate on some examples of pay plans that you've seen work?
Yeah, and I know we're short on time too, but you've talked about, because you handle the sales end of it more, incentivizing sales managers for finance deals and being able to convert. As far as in the box for finance, I like the tiered pay plan. I've always loved it. I love something to chase. I like you to start me here and give me goals that are obtainable, that I can chase that goal and get to it. Because if you're going to tell me I can make up to 16, 18%, guess where I'm going to climb? If you start me at 10, I'm going for the gold. And that's who you want working for you. You want someone who wants to chase that and do it. And that doesn't mean you're doing anything crooked in that finance box or thing. It just means you're being 100% consistent in what you do with your process. You can make a fair living off of all of your customers if you do everything consistently and do follow the process 100% of the time. You don't have to be heavy on VSC. You don't have to overcharge for it to get there. You don't have to do any of that. You just be consistent and give them the fair, all the benefits, show them all the benefits that they can have. Don't pick and choose for them. Don't let them know what they need.
Yeah, I like that. One of the, you mentioned sales and pay plans and sales. One of the things that we did in the sales department that was really simple and created incentivized alignment very quickly was that we didn't measure our salesmen on product penetration rates. We measured our finance managers on that. We didn't measure our salesmen on how many service contracts we placed or even the gross profitability of financing. But what we did measure and incentivize our salesmen on was finance penetration. So how many deals do they finance? What is the percentage of deals financed compared to their total deals that they got? And we made the pay plan really simple. We set a base benchmark and then a series of upper benchmarks for penetration percentages. And with each benchmark that salesperson achieved, it increased their gross profit on the front end gross. So their normal commissions just increased by a percentage point for each benchmark that they accomplished. What those benchmarks are, that depends on your dealership. Depends on where you are in this evolution. If you're at 50% finance penetration, then maybe your base benchmark is 60%, and maybe you go up 10% from there. But if you're currently sitting at 75% finance penetration and you want to get up into that upper echelon of dealers that are doing 85 or 90% finance penetration, maybe you're more aggressive, maybe you start higher. So those benchmarks have to be kind of curated to where you're at and what you're trying to get to. But a really easy outline for a pay plan for your salesman that creates that alignment is to just set those benchmarks and then increase their commission rate on their front end gross incrementally by benchmarks achieved. It makes it really easy for them to see. It's easy to understand. You don't get in a situation where you have a pay plan that's so complicated that at the end of the day, the salesman's saying, how did I get here? Because that defeats the purpose.
Can I add on that real quick with you?
Yeah.
Because I know we're out of time. Is that we have a certain dealer group that I'm pretty sure some of them are on this call, and I won't say names or anything, but ours are mostly all cash. We do a lot of phone deals. We do a lot of this, and they were about 60% finance or so. They run consistently over 90%. So if you tell me that your customers are different, I'm going to tell you I walked in this group and their customers were different, and I fought it tooth and nail, and they are consistently, 80, let's be realistic, they run over 80, but they are consistently on 89 to 90% monthly. And I'm super impressed with them. They're a great team. Sales loves them. They're all great. So that's what I wanted to say, because I love them.
Yeah, and I can corroborate that through personal experience. As we grew, most of the locations that we acquired were sitting in the 50% finance penetration or less. There was a lot of sending people to get their own money, quote unquote, which really should never happen. And there was a lot of that. And we were able to get every location virtually without exception up above 75 or 80% finance penetration. So it really is true. For the most part, customers aren't significantly different in the way they buy. It's the teams that change and the dealership processes that are different. The customers largely buy the same way. The last thing that I want to touch on, since we are down here we are at 45 minutes, so we need to wrap up, is the one thing that you've got to make sure your team is doing is 100% menu penetration. And I know, Rachelle, you talk about the 400% rule. I'll let you elaborate on what that is.
So we, Marco and I have the 400% rule. We all know the 300% rule. So it's 100% menu presentation, 100% of customers, 100% of the time. The fourth one, though, is 100% the effort. Because we can phone it in, but if we're not really doing it, it's a cash deal, I don't really feel like it, yeah, you're probably not going to make a win. So if you don't put the effort in there, you're not going to get a win. And, it's holding yourself accountable at this. This is, we don't all feel like being at work every day. I say I'm a nerd about it and I love it. Doesn't mean I want to be at work every day, but it meant that I had to just put on my, fake it till you make it. That's my famous line. Fake it till you make it. And just do it. It's your job. At that point, I enjoyed my job, but at that moment, it's a job at that moment when you don't want to be there.
And I think that's a great way to round this out, is what you just said. There's a lot of self-accountability, especially on that last 100%, which is 100% effort. I can measure whether or not, at least I can measure with a pretty high level of confidence, whether or not a full menu is getting presented every time. If I have a menuing system that I use, MenuSys, MenuMetric, if you're menuing an IDS or any other DMS that you might be using. If a menu is being created, I should be able to look at every deal and see if that menu was indeed created, and if indeed that menu had all the products on it in its far left panel. But did I present this with 100% effort? That's where the right person in the seat becomes critical. Because that really has to be self-managed, and you have to have the right finance manager who truly believes that they're not going to make assumptions about what the customer wants or what they might buy. They're going to present every product every time. We know that improving your product penetration rate across a menu of products is the best way to increase your percentage of sale, your F&I profit as a percentage of sales. And to reduce chargebacks, increase retention, because that's always a piece of risk that's hanging out there in F&I. So I think that's a great place to leave this. We could go on and on about this subject, but we are coming up on the hour here, so I do want to leave some time for questions, which we could. But before I go into that, I do want to just say, if you have any questions, if you want to talk more, if you want more training on IDS or how to facilitate F&I better within our system, reach out to the channels here at IDS, your account manager. Call us at 800-769-7425 to get our general sales line, or email us at sales@ids-astra.com. And if you want to get in touch with Rachelle and her services, feel free to reach out to her directly at 530-867-7979 or email her at Rachelle@elevatedealers.com. So with that, I will stop sharing my screen and I will open this up to some questions.
Do you want me to answer that?
Sure.
What was it? Can you put the question back up for me? I think it just shares some successful menu presentations. My preferred way, I'll just make it easier because I think I'm answering the question, is I use 3 columns. I don't ever call them packages. I call them benefits. You include everything in the first one and you just drop off 1 item on each. You don't use all 5 ever, because why? If you don't have to start, you're going to have a higher success rate of closing more products if you just have a 3 and you get down to like the basics. You call them whatever you want, gold, platinum, so whatever you want. But I find it to be the best way. That's my preferred method.
On this question, what penetration rates are you seeing across dealerships? So if we're talking about finance penetration, we are seeing penetration rates up in the 65% range as a industry-wide, at least in the US, penetration rate. But like we said, from personal experience, my organization across 9 dealerships was over 75% organizational wide, and I had locations that were penetrating at over 90% consistently month over month. We did employ, just fair warning, we did employ some F&I discounting tactics very strategically, lawfully, we made sure that we were compliant in those. But we did employ some of that, and that's, I think, where we saw kind of that move from 75% to 80% up into the 90% range, is when you start to incentivize the customers that just don't want to do it. But yeah, that's industry-wide about 65%, but 75% and higher are very obtainable numbers. And when we're talking about for me, Rachelle, I'll let you elaborate if you have anything, but for me, when we're talking about product penetration rates, the primary one that I focused on was service contracts. We looked at all of them. I wanted to see a product index over a certain point. Ideally, I wanted to see a product index that was approaching 3. So average products per deal of 3. It's tough to get to, admittedly, but we did have stores that were there consistently. But the one that I specifically focused on in service contracts, I wanted to see our service contract penetration rate to be the same as our finance penetration rate. So if I had a 75% finance penetration rate, I wanted 75% service contracts. Now, for the stores that hit the 90%, that really, really high mark, they got a little slack there because it's pretty hard to sell a service contract on every deal. But that's typically, we wanted to see service contracts match our finance penetration rate. So I hope that answers your question there. Comment from Scotty: stopped cash conversions 2 years ago, just started focusing on product presentation for cash buyers, and your penetration on cash deals went up over a product per 800 per cash deal. That's great. I think that's a great example of don't roll on cash. Even if you can't convert them to finance, you don't know what they're going to see value in. If you tell great stories and you have great examples and you can build that value in the customer's mind, you will find that cash customers will buy some of these protections. They'll buy service contracts. They'll buy chemical appearance protection. That's a really popular one amongst cash buyers because they want their thing to look good. They want their motorhome to be shiny 5 years from now. So great comment. Thank you, Scotty.
And offer SIU programs, because remember, that cash buyer might not be even really cash buyer. So if you have a payment plan option with 0 interest, make sure until dig into why they don't find the value. What's the real reason? Is it the dollar amount, or is it just that you don't want to pull $3,700, whatever it may be, out of your pocket at that moment?
Yeah. Or did you have a bad experience in the past? Did you buy one in the past that you didn't, I walked away, didn't cover anything. So let's see.
I broke up, I guess.
I think you broke up on that. We are running out of time here. So I think with this, we'll leave everybody to get back to their day. Appreciate everybody who did join. I hope you guys found this helpful. Like we said, reach out to us here at IDS with any questions, and reach out to Rachelle if you're interested in hearing more, talking to her about her services and what she can provide. She did wonders for our organization, and I recommend her highly to anybody looking to improve in this area of their business. It can make you millions. I've seen it. So.
Literally. I appreciate you guys. Thank you.
Thank you, everyone.